Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, my guest this segment, Nick Santiago, President and CEO of InTheMoneyStocks. Nick, thanks for coming back on the show. How are you?
Very good, Michael. How are you?
Doing really good. Okay, you want to start off with the FXC today, right?
Yeah, I'll start off with FXC since...
I'm sorry, FCX. Excuse me.
FCX, yeah. This is Freeport-McMoRan, and again, probably the leading copper stock out there. Today the stock's getting a little bit of a bid, but ultimately I think after maybe late next week, this thing could be setting up for a nice short. I'm looking at the daily chart pattern, and what you're going to see is a long base from May 23rd into the current today. And what you'll see is if we go up a little bit more, it looks like we're putting in this just a choppy sideways wedge, and that is setting up, in my opinion, for a nice little move lower into probably the $25 level.
Okay. Any time frames on that? How long do you think this trade will take to last? Or take to
Well, I'm
run?
thinking by the end of next week, it could be setting up for the entry, and then it probably trades lower until the fall season.
That's pretty low price to see. I mean, we've got the weekly chart up here. That is going to be one heck of a nice trade.
Yeah, it's setting up. I mean, look at the weekly chart. You can see the beautiful setup already. And, I think we'll get an opportunity probably sometime late next week, early the following week, to get in this thing on the short side.
But fundamentally, that is sending a very strong message, both domestically and abroad, of what's going on with the underlying economy.
Oh, it's horrible. I mean, it's more not so much domestically in the United States, but what's happening in Asia and what's happening in Europe is just, it's horrible. What can you say? I mean, there's no other way to put it. But as traders, we see this, we can exploit it and hopefully make some money off of it. But I believe, as you know, Michael, in the fall we'll get a chance to actually buy these things. So right now you don't want to own them, though.
Okay, and that says a lot for the S&P markets, too, because obviously if we have copper move in that fashion, that's going to drag a lot of the stocks down with it.
Absolutely, absolutely. Copper's a leading indicator. It always has been. The legendary trader Jesse Livermore used to say that all the time. Always watch the trends in copper. They'll tell you more than you think.
Got it. All right, JJS.
Yeah, JJS is it's an ETF for soft commodities, and it doesn't trade a lot of volume. But one thing I just want to do is point it out. Recently soybeans and corn have been soaring, but these charts are now unsustainable. So, they don't have a lot of upside without a pullback. So in order for these the soft commodities like corn and soybean, in order for them to continue to move higher, they're going to really need to put in some consolidation patterns. And if you take a look at this JJS, this thing went from basically 54 to 64 throughout the month of June. That's a tremendous move. But now it's looking like it's getting a little top-heavy here. Maybe it has a little bit more upside in the charts, a few more points. But I wouldn't look at too much more here in the soft commodity section. Okay,
soft commodities are confusing me a little bit because normally my old school stuff is that's coffee, cocoa, sugar, and cotton. No, not with this.
It is, but right now this here is getting a bid more with the corn and soybean markets.
Okay.
So that's really. But generally, if you watch this JJS, and I just use it as a barometer, I don't even trade it because there's just no volume here. But I know I've been getting so many emails and questions about corn and soybean, and I pull this chart up, and it looks just like a replica of those. And I said, maybe I'll use this when I speak to Michael on Thursday. So, but again, it's getting very top-heavy here. I don't think there's going to be a lot left in these charts.
Okay, got it. All right, now this XLE, energy sector, what's going on with this one?
Well, XLE is a very good barometer because, as you know, it's probably the energy sector is about 16, 7, maybe even 18% of the S&P 500. If you take a look at the XLE chart, you'll notice that the daily chart went right up into that 200-day moving average on July 3rd, and then it has pulled back off of it. And now it's making what I think is going to be a bearish retrace pattern. So this is another chart you could watch probably going into next week sometime. If it gives you a bearish setup, I think the XLE, again, with most energy stocks, can be sold short.
Okay. Do you have any price frame on this XLE?
Well, I think it could trade as high as 67.50, maybe 68. The downside targets would be around $59.
About 59. Got it. Okay. Now let me ask you a few questions. We've run through a lot of corn. You wanted to talk about corn before we go?
Well, I wanted to talk about this CORN, which is a corn ETF, and just goes back to what I said with that JJS. There's not a lot left in this. Anytime charts go up parabolic fashion, such as this did, there's not a lot of upside. The max upside on this thing would be around $53 if it could even get there. It may have even topped out yesterday. So
it's got a hammer on it right now.
Yeah, you got a little hammer on it right now. But yesterday you had a nice reversal day in there. It's also topping out on a weekly chart on massive volume. So I'm thinking 50 max move would be 53 on this thing, and aggressive traders could probably sell it short up there.
Okay. All right. Now, how about the TLT? This bond market is right up at as well as the U.S. dollar. I was just talking about that a minute ago.
Last time I was on your show, what I said was the TLT was setting up with a bearish pattern. I said the only exception would be if it can close above that June 6th top, which June 6th high that day was 127.60, and it did that. Right now, the TLT is looking very strong to me. It could pull back over the next few days, possibly even next week with options expiration upon us, but this is in a real strong technical position right now.
Okay, so a sudden jerk and rise in interest rates right now, not so much in the cards.
No. Right now, I think that bond prices are setting up to move higher. In fact, if any pullback pattern, this TLT is a buy in probably into the 135 level. I mean, it's very, very strong right now. It's not backing off at all. It looks very, very strong. In fact, it had a bearish pattern to break down, and a lot of times the best moves come from failed moves. And this is a failed bearish pattern, so it's in a strong position again.
Okay, all right. Now, because we're right up against it now with the U.S. dollar, and it could be a double top, or it could just really take off.
Well, the dollar right now, you hit resistance on the U.S. dollar index futures at 84, but the dollar is still a monster right here. We have Options X, so there'll be a lot of game playing next week by the institutions. They'll be trying to take the small retail options traders' money. Whoever is buying, getting too bearish on this market at the moment, I think. But ultimately, the dollar is setting up. In fact, if it can base here for a while, Michael, without even breaking through 84. It's gonna go up to 86 to 90 with velocity. So I mean, this is just building pressure here. I don't see anything wrong with the dollar right now.
So this gives me the feeling that we could see, if we break through this 84 here, we could be a compacted, very violent, deflationary trade in a lot of markets.
In every market, just about. I mean, with the exception of the inverses. I mean, the dollar is telling us right now. I mean, the dollar's hitting 84. It's pulled off a little bit today, but it looks really, really strong. Just the move that the dollar made to get above the red bar high from June 29th shows you strength in the dollar. I mean, it was able to close above that June 29th top at June 29th high bar, which was 82.90. It's just showing strength. So right now, I'd love to see the dollar not even break out now. Just let it base, and then it would be setting up for a move to 86. Possibly $90.
Okay, so just connecting the dots on my end, it seemed, because I've had a cycle date about the 17th for some kind of a capitulation move. It seems to me that there's some fundamentals out there that these prices are telling us that we're about to see some really wild and woolly next week trading.
Well, next week's options expiration, so what I'm leaning towards is the week after that. I'm thinking that after options expiration is completed, which would be next 20th of July, that's when traders need to start really eyeing the patterns. Rarely do we see, any kind of real breakdown during options expiration, although it can happen, especially how vulnerable these markets look at this moment. But usually the institutions will try to shake out the small retail options trader trading the near-term expiration. So I would be more on guard for the following week personally.
Okay. All right. No, I wanted to hear your opinion, not just, throw my stuff on top of it. All right. Before we go, give everybody a way to reach you so they can get into the trading room and watch you pull these trades off.
Yeah, just come on over to InTheMoneyStocks.com. Take a 7-day free trial to our intraday stock chat, or else you can come over and check out our research center. In there, you'll get all of our cycle work, all of our swing trades. You'll also we hold 2 nightly meet and greets where we answer questions from all the members. And that's live. So I think it's worth its weight in gold.
I appreciate that, Nick. Thanks so much.
Thank you, Michael. Have a great day.
You too. All right, everybody. That's Nick Santiago, President and CEO of InTheMoneyStocks.com.